Assalamu alaikum. Welcome to Difficult Conversations, where we tackle taboo topics in a safe space through empowerment and education. Assalamu alaikum, everybody. Welcome back. We are back for another season, and I will be your host, Abshiro, and
I'm Bonnie.
Today we have an amazing guest with us to tackle a topic that, we've been getting a lot of questions on, and there's just been a general overall confusion around, and that is Islamic mortgage and financing. So to kick us off, I want to introduce Hussam Qutub, who is the Senior Vice President and National Sales Manager for Guidance Residential. In his bio, he did join the company in 2003, and he's in various other roles as well, helping the company in its early stages, finding the Guidance Home Services, creating which is a national referral network of real estate agents. Before Guidance, Hussam worked as a senior consultant in marketing and public relations. He holds a BA in international sales from George Mason University. We are really excited to have you. Welcome to our show.
Thank you guys for having me.
How was your flight here today?
Uneventful, delayed by a couple of hours, but otherwise smooth.
Alhamdulillah.
It's not your first time in Minnesota, correct?
No. I've been in Minnesota many times.
You should move here.
Summers are great.
Summers are great.
Yeah. We only have summers or construction. Those are our two seasons.
So. Construction?
Yeah.
No, it's winter, construction, and then fall.
Yes.
Summers.
Yep.
Yeah.
Yeah, that's what I meant to say.
So tell us a little bit about yourself. Like, where do you reside? And
okay. I live in Northern Virginia. That's a suburb of Washington, D.C. This is where I grew up. For a few years, I lived in the district in the nation's capital. But then when it was time to get married and have children, I ended up moving back out to Virginia. So it's a town called Vienna. If you've heard of it. Yeah, no. It's a wonderful little town.
Vienna is beautiful.
Did you always want to be in this, what you're doing currently, in like mortgage and finance and stuff like that?
It's an interesting question. I honestly didn't know if I was going to be in this specific realm because I wasn't educated as a young child on this specific industry, meaning Islamic financing isn't something they teach you in school.
Yeah.
But real estate and housing in general, I took an interest in a long time ago. As a young child, I would go to my parents and I would say, this house is for sale, that house is for sale. Everything was in newspapers back in those days. And so the Sunday paper had all these homes and I wanted them to purchase a farm. So I would literally cut these things out. And let's go to the open house.
That is so beautiful. Like, were you into farm animals and stuff?
I was into horses.
Okay.
So I really wanted to raise horses.
Oh, okay. Well, speaking of housing and housing market, in your opinion, how do you think the housing market is doing?
Well, I think in general, there is a shortage of inventory. That's a fact. It's been that way for quite some time. I think it's been that way for about a decade and a half. And but if you're looking at the market, and my philosophy is owning a home, if you're moving into this market to buy, as long as you're not in it for the short term, it's never a bad decision. It's actually a very good decision. It's a decision that enables you to create generational wealth. And to me, beats renting anytime.
Yeah, my dad used to say, like, all the time, he's like, he'll always tell me, like, how much do you pay in rent? And, I'll tell him before I bought the house. And he'll be like, then he'll calculate it by 12. And he's like, you're just throwing that money away. You know that, right? You're just taking it to the garbage and you're burning it. And so he was like one of the main, reasons he was, pushing all of us to buy and stuff like that, which isn't always easy
or possible for a lot of people now, especially with this economy that we have.
Yeah.
But I wanted to ask a little bit more about like your journey to guidance and your journey into financing. So you said that you were into farms and you wanted to get, a horse, and I guess, so how did you find your way, I guess, or your home in guidance?
Well, of course, I went to college, and then at the end of college, I started looking at different career opportunities. I wasn't sure what I wanted to do. I joined a law firm for a short period of time, thinking that if I get that experience, it could open a whole new world for me to be able to maybe go back and go to law school and those kinds of things. But what I learned was enough to push me in a different direction, and that was more in the business consulting realm. And that opened my eyes to a variety of different clients, different industries. And through that experience, I actually became a lot more aware of kind of housing and the need for home ownership. I came across some people that actually knew about guidance. It had just started about 8 months prior to my meeting with them. And they were the ones that really kind of influenced me to kind of make that change. I had met one individual at a business luncheon in Washington, D.C., and he had left Morgan Stanley to join this organization and said to me that I should really take a look and learn more about it. And so I did. After several meetings, my intent was to try to make guidance a client of mine. But then I actually met the founder of the organization, Dr. Mohammed Hamour, and that had a profound impact on me and really helped me see the vision of what he had in mind. And it was a 100-year vision to create an Islamic finance institution, a global one.
So at that time, like, what was, how did the Muslim community look in the United States, and what were they doing?
Yeah, great
in terms
question.
of home ownership?
Well, it was right on the heels of 9/11. So the community was kind of in this state of fear. And of course, the media didn't help for the most part. So there was this instability, I think, unease within the community about, where's our place in America, especially for those who are first generation or immigrants. And so there's nothing like putting roots down and making, your state home and your future here. And so understanding that and understanding kind of what is going to help American Muslims down these next few decades. And I think it's really kind of institutionalizing our beliefs, especially in the financial sector, and recognizing that home is here, not necessarily there. Putting roots down here, investing here, investing not just in real estate, but investing in your children's future, education, and so on and so forth is crucial. And so that is tough for Muslims when there's only riba-based options. It's very, very tough. I went to college and I had to take student loans. There were no options. So there's just one sacrifice after the next. But you have to get through them, and you have to understand, okay, what could be better for my children, my children's children.
So to go ahead. to kind of bring us into it, I know that there's a lot of confusion on the different types of, home financing and what's acceptable Islamically. Can you just kind of go through what those are and what are things that guide, where does guidance come in into those?
Yeah, prior to 2002, when guidance was launched, most Muslims in America, who were paying attention at least, went with the fatwa that was issued by an international scholar. His name is Qardawi. That fatwa was about darura and about in times of need, when there are no options, you can pursue a conventional mortgage to own a home. But that's only if there are no options.
Yes.
So now, after 2002, when guidance was launched, the option became available for Muslims in one state or another. There's still states that don't have these options. Minnesota has the option, of course, but the key differentiator now becomes, okay, is it competitive? Is it, am I going to qualify? And if so, then why don't I pursue this? And what is the difference here? So there's an education alongside this. And really, the biggest challenge of our last 22 years in business has been education.
Mhm.
Education in what riba is, why it's haram, what are the alternatives, and how are they halal.
Yes.
So those things are not taught. They're not taught at the masajids, unfortunately.
I think the only thing that is taught at the masajids is the fact that riba is haram, and not necessarily like the different types. Because I know, like, when my husband and I were, buying a home, it was a lot of self-education, kind of going through, like, you have the murabahas, and like the ijara types and all that stuff. So with this, I guess, lack of information, what is the first thing, was a priority for guidance in trying to educate this community?
Well, when I joined, one of the things we learned was even within our organization, as we were hiring individuals that maybe understood the financial part of it, or the financial qualification aspects of it, didn't quite understand how to explain or relay the what is riba and why it's not permissible, and how is our structure permissible. That was a challenge. So what we did is we embarked on the creation of a white paper, a very simple white paper that had frequently asked questions. So it was about a 2-page, 3-page summary, and then about a dozen questions. And we started circulating that internally, and then circulating it to imams. And the feedback we received from many imams was incredible. Many of them thanked me when I would visit, because they needed this level of information that they did not study per se. Because an imam, if you really think about their role, they are like if you compare it to, for example, a physician, they're your general doctor.
Yeah.
They know the basics. They know how to, of course, marry people, provide khutbahs, some wisdom, advice, counseling. Unfortunately, even funerals, conducting those and such. But when it gets to a discipline within Islam, like Islamic financial transaction laws, the muamalat of that type of transaction, you have to go on and study that. There's a curriculum involved. And there are scholars that specialize in this space globally. So educating even our imams was priority number one. And then moving on to the community, of course, through those imams and community leaders. But it began with that simple, let's create a document, and then let's layer more on top. And then eventually, this was 2002, so the internet wasn't such a big of a marketplace as it is today. So eventually, we layered in videos, long videos, short videos, whatever attention spans people had to be able to absorb what we were kind of trying to educate them on. And that's key, I think. That is very, very important, because I think we were talking earlier, trying to explain it to even your children, for example. You cannot make them read a white paper.
Yeah.
They won't last past the first page.
Yeah.
So you have to explain it in terms that are essentially simplified, digestible. And so it is a complex, finance in general is complex as it is. And then you layer on Islamic financial transaction laws, and those become complex. But today, for your audience, I'm going to try to simplify it to the best of my ability, so that it's sound bites that they can, take home and really digest.
So I want to kind of step a few steps back and a step away from guidance to Islamic financing in general. If you had to, like we said, if you had to explain Islamic financing and how it's different from conventional financing to a fifth grader, how would you do it? And Abshira mentioned the two types, and kind of just because there are people that haven't even gotten to that level of exposure, right?
Yeah.
So kind of to put the burden on you.
Well, in the Quran, this is where we're taught kind of many things, but riba, it's brought up in the Quran very explicitly. And there's a verse in Surah Al-Baqarah where it says, those who take unlawful interest will stand before Allah on the day of judgment as those whose minds have been corrupted. They say that commerce is just like interest, but Allah has made commerce lawful and has forbidden interest. So even during the Rasul sallallahu alaihi wasallam's time, even during his time, people were confused. So it's okay that we're confused. People were confused. They would say commerce is just like interest. There's no difference. But there is a difference. And that main difference hinges upon lending money. The loan. The loan itself in Islam, as described by many scholars in this space, is at the heart of this issue. It's a contract. And so a contractual lending agreement is permissible in Islam, but it has a place. And that place is a charitable act, charity. It's meant to help those who are experiencing hardship so that you are able to support them, help them, but not take advantage of them. So that's where a loan contract belongs. It does not belong necessarily in investments, commerce,
profit.
Correct.
Okay.
And so this isn't new, by the way. The prohibition on lending money at interest spans even before Islam. It's prohibited for Christians, for Jews. It's in their books. It's clear in their books that it's prohibited. Do not lend money at interest to my people in Exodus, for example. And so there is that essential sort of key point to understand. So then why, right? The question is why, and what are our options? You mentioned some contracts. There are contracts that are permissible for facilitating a purchase or anything of that nature. They're all, the common theme of Islamic financial contracts is, the cornerstone, I would say, of these contracts is ownership by the financier, whoever the financier is. Must have ownership. And loss sharing of some sort in the asset, whatever it may be.
Which is also, is that the same thing as risk sharing?
Yes.
Okay.
That is correct.
Okay.
And so ownership is key.
Okay.
If you do not own something, you cannot sell it. If you do not own something, you cannot rent it. You cannot make money off of something you do not own.
Okay. So then would that be a double contract? So like you, like the bank, say has the house, first has to own it and then turns around and sells it to me. So that essentially it's a one transaction here and then the second transaction with me.
I can own, I can go buy a car, refurbish, buy it for 5,000, refurbish it and sell it for 6. That's halal.
Yep.
I could even sell it to you on installments. Let's say $1,000, for 6 months. That's halal. There's nothing haram about that.
Okay.
But if I was to loan you $6,000 or $5,000 and charge you, so you can go and buy the car and charge you interest to repay me, that's haram. So contracts are crucial. They're crucial in this aspect. Now, I'll explain why.
Okay.
Number one, money in Islam has no intrinsic value. It's not regarded as something of a product that you can sell. So money has no intrinsic value.
And you can't create money from money.
You cannot create money from money.
Yep.
If you were able to create money from money, those who have will take advantage of those who don't. And the cycle of poverty and
as we see now,
as you see today. And there's many problems with the world today as a result of the monetary system. You have rising inequality, rising debt, rising poverty, rising unemployment. And this is a direct result of the way the financial system is structured, where I'll give you a simple example. Today, everybody banks. Everybody, there may be people who put their money under their mattress. I understand. It's not the safest route, but you take, $100 and you deposit it into a bank. The banks today, there's something called fractional reserve banking. And what they do is, this is part of the banking system. They take out 90% of that deposit. So you're depositing your money for safekeeping.
So is that for savings or checkings? Or
savings or checking? So you're putting it in the bank for safekeeping, so that you can access it whenever you want. But the bank will tell you it's safe. while you look away, they'll take 90% of it and loan it out through credit cards, car loans, business loans, and so on and so forth. And then the person who receives that credit now uses it to buy something. When they use it to buy something, so imagine $100, they just received $90 on their credit card. They go to buy something with that $90. The person who sells them the service or the product deposits that $90. Where do they deposit it? In the bank. The bank takes that 90 and takes, again, 90% of the 90 and circulates it out again and again. And this cycle continues and continues, by the way, to the point where if everybody went to the bank today to pull their cash out, it wouldn't be there. We know this. This is the vicious cycle of the fractional reserve banking cycle. Now, the problem with that is this. First, they're loaning that money out to someone and charging them interest. Haram number one, there's riba based on that contractual relationship. And now you're party to that because it's your money.
So, sorry,
Okay, go ahead.
I just want to ask because, I'm just going to talk about myself. So for us, me and my husband had made a decision not to put any money in our savings because we didn't want to get interest. So we thought like we would be safe, which is the reason why I asked the first question if is it savings and checking's the same thing. And most people I feel like do the same thing, which is they put it in all their, whatever money that they want in their checking account so that they don't get interest on it. But then,
we do the same thing.
Okay.
I do the same thing. I tell the teller if I ever go to the bank, don't bother pitching me on
savings
on an account that's supposed to give me returns. I know you may think I'm crazy, but I don't want the returns. And a lot of Muslims, I'm sure, do this. Because number one, it is returns based on lending at interest, number one. And number two, you really don't know what they loan the money to, who they loan the money to, and for what. Because assume the worst, because it can happen. The bank lends it to a liquor store. The bank lends it to a casino. The bank lends it to
arms
something.
dealer or whatever.
Whoever can qualify from a credit profile perspective will receive those funds as long as they're legal. But I wouldn't want to
be
lend
party to that.
To some things. These are my hard-earned funds that I put in the bank. So there's ultimately a problem with that. And so one of the things about our organization is we're not a bank, and we're not a subsidiary of a bank. We're not owned by any banks, and we're the only Islamic finance institution in the United States that is not owned by a conventional bank.
So where does the funding, the capital come from?
So our founders are a 60-year-old private equity group, two Muslim families, namely a Syrian family from Syria originally, started the organization in Syria and Lebanon, and is headquartered now today in the United States in Washington, D.C. So these investors, these Muslim investors, made a conscious decision in 1999 to back one of the investors' sons, Dr. Muhammad Hammour, to back him in this new venture.
Okay.
And it was going to be a monumental feat because there wasn't such a thing at the time where there was a standalone Islamic finance institution not tethered to a bank. And so it took 3 years. Millions of dollars, 18 different law firms in the housing industry of the United States, working with Freddie Mac and Fannie Mae's legal divisions, because they needed to understand that if we're going to do this, we want them to securitize these musharaka structures. And so after 3 years, and after all that painstaking work, we're able to launch the first musharaka mutanaqisa, which is a declining balance co-ownership program for American Muslims to purchase homes.
Can you explain that a little bit? Because I think, what the musharaka is, and
Absolutely. So there's musharaka is Arabic word for partnership, and traditionally people think of musharaka or partnership as joint enterprise. But there's actually two types of partnerships in Islamic financial transaction laws. There's joint enterprise and joint ownership for the purpose of transferring ownership.
Okay.
So joint enterprise is very simple. It's if you open up a business together, if you, whatever that business may be, you share equally 50-50 or 75-25 in the expenses and in the profits. It's not that type of partnership.
Okay.
Why? Because we wanted to have Muslims be able to take advantage of all the appreciating value that real estate has to offer over time. We wanted that to go 100% to them when they purchase a house. So the scholars at the time, the board of scholars that worked on this project for 3 years, went with something called Shirkat al-Milk, which is a form of musharaka that is joint ownership. It comes from inheritance. Inheritance laws. So if parents pass, the children become partners in the assets that the parents leave behind. Automatically partners, and now have to make a decision of who wants to be liquidated, who wants to keep the property, live in it, and so on and so forth. And those decisions are done over a period of time or a term. Where one occupies and is responsible for the costs, but the other one's being bought out and also compensated for having a portion of their inheritance used by the other person. So in this case, we purchase properties together with our customers through what's called a co-ownership commitment agreement. That's the difference. There is no lender agreement. So we actually bring our money by the creation of an LLC for each property. And that establishes our ownership. So let's say it's $90,000 for $100,000. I know finding $100,000 is almost impossible in the US today, but let's take that as a simple example. So you bring $10,000 of your own money and we bring 90. We can go up to, by the way, 97.3. So 3% down and so on and so forth. But if we do 90-10, we bring $90,000 and we establish our ownership in the property through the creation of an LLC. So the LLC owns 90%. It's a guidance LLC. And the customer owns 10. Now the agreement, the co-ownership commitment agreement, it's very simple. You pick the term, 30 years. You want to buy us out in 30, 20, or 15. You decide. You can buy us out in a shorter period of time at any time, but you want to establish a timeline because we don't want to be co-owners for life. And so in that term, you agree to buy us out each month while also paying us for using the portion of the property that we've given you exclusive use and enjoyment of.
So is that one contract between you or two separate contracts between?
One contract. There's the
Because I know that's been a little bit of a confusion versus if it's one contract just between you and guidance, or two separate contracts where we are partners, but then at the same time, there's also a separate rental agreement as well.
No, the co-ownership commitment agreement is the sole contract. It is the heart of that stack of documents that you have to sign at closing if you've ever been to a closing. And the majority, 95% of the documents are government required disclosures. Have nothing to do with the relationship. It's just mandated disclosures. But when you get to the heart of what really counts, it's the co-ownership commitment agreement, which is completely different than if you were to sit at a Wells Fargo or traditional bank's closing. The heart of their agreement is called the lender agreement, where they're fronting you the funds and they're not taking any ownership. They're stepping back from that.
The other aspect of it is the whole risk sharing that we talked about earlier. And so in this regard, then how would guidance share in the risk with me as the borrower?
Yeah, that's a great question. So you guys didn't experience it here in Minnesota, but we just had a hurricane event recently come hit the U.S. Through the southeast. Many homes were destroyed by flood waters and so on and so forth. So that's a trigger event to potentially having the contract dissolve because there's no more home. If it's destroyed, we don't co-own anything together anymore, right? Except whatever's left, the parcel. In those situations, natural disasters or eminent domain. Eminent domain is if the government decides they want to expand a highway, a school, and so you're being forced. So these are trigger events that are not caused by either one of us in this partnership. If there's loss due to these instances, we share it pro rata equally in that loss. So if it's $100,000 loss, and let's say the example is we're 90% owners again, 10% is the customer, and the insurance company after the loss says, well, you didn't have flood insurance because it wasn't a flood zone, but the house was destroyed by a flood, and they cut you a check. The proceeds equal $60,000 or $70,000, less than.
Yeah.
We would take that amount and divide it 90%, 10%.
Okay.
There's no other financial institution in the United States, no other even Islamic institution in the United States that would do such a thing. And
so then, sorry.
Go ahead.
So then, in the contract, the customer is still required to take out the insurance on their behalf, or does guidance carry that insurance?
Yeah. So property insurance, taxes, as well as maintenance is all the responsibility of the consumer.
Okay.
Reason being, based on the scholar's evaluation of the contract, is...
Wouldn't that be an unfair risk-sharing model?
Well, so the consumer, number one, benefits personally from, let's say, maintaining the property and the actual taxes. Taxes go to local municipalities, schools, and law enforcement, paving of the roads, shoveling the snow, and so on and so forth. The person occupying the property benefits from that. Maintaining the property, you're living in the property to maintain it, you benefit. You maintain the property value increases, you receive the full amount of the increase. So in both cases, yes, I think the benefit goes directly to the customer. With the case of insurance, it's good that you asked. We actually do share in one portion of that insurance cost.
Okay.
And that's up to the customer to actually select the program where we share versus the program where they take it on themselves. There is the brick and mortar itself, the house itself, and then there's personal possessions. When you take out homeowners insurance, you really have essentially a bundled package of things. You have the hazard insurance, which is in case of people slip and fall on your property. You have the actual brick and mortar, and then you have personal possessions, which is your TV, your couch. So guidance does offer the ability to take on one of those insurance with you, the brick and mortar. So you have an option at the time to actually pick one of the programs that shares and one of the program that is priced a little bit differently that does not share. The reason why we gave the option to the consumer is because if you take an insurance policy and you begin to unbundle it, insurance companies will raise their prices, making it extremely expensive. So what we learned is it's not advantageous necessarily for a consumer to unbundle these and say, okay, I just want my personal possessions and hazards separately, and the brick and mortar part of the insurance I'm going to share with guidance. Well, your premium skyrockets at that point. So we've had to create a workaround to try to help the customer make the decision on their own. You can select one program that actually does that, unbundled it, or a program that has it all where it's bundled and you pay for it, but you're saving significant amounts of money on that insurance policy. And what we're doing is we're essentially lowering by a bit our pricing for utilization.
I like to do comparisons because I feel like conventional financing is so much common now and people are so familiar with it, right? And I'm asking this because I don't know exactly, and if you don't, it's fine. Let's say, because we were talking about how let's say there's a flood and then because the person didn't have flood insurance, they got only a portion of their money to cover. In conventional, the bank still expects you to pay for the amount that you owe, correct?
That
regardless
is correct.
of how much the insurance is covering or not.
Yeah.
So you might end up with no home, half the insurance pay or covers for you, and then the rest will come out of your pocket. Is that my understanding of conventional ways?
That's correct.
And then with guidance, you whatever the insurance decides, you guys do those and then wash your hands and walk away.
I mean, it's not a theory. It's actually, it's been practiced for us. We had a hurricane hit Houston years ago, devastating hurricane. And many of these homes were not even in flood zones. They didn't require flood insurance.
Mhm.
But the stormwaters came in and they were such where they destroyed the homes using flood. We took the loss alongside with them pro rata. Now, the reason why conventional mortgages don't function the way we function is based on one thing, the contract they use.
Yeah.
They use a loan agreement.
Mhm.
So when you're using a lender agreement, it's very simple, right?
Yeah.
I'm loaning you $90,000.
Mm-hmm.
You just pay me back at interest. What happens between
Between
you
you
and the
and-
property?
None of my
It's none of my
problems.
It's not my problem.
Yeah.
It's not my problem. And that's the danger of lending money at interest.
Mhm.
In 2007, the mortgage crisis, what we had on our hands was a record amount of deficiency judgments to people who were underwater, to people who basically couldn't afford to make their mortgage payments, and they turned in their keys to the bank and said, "It's yours. I can't make the payments anymore, and I can't sell it because the price got reduced to a point where I'm below what I originally borrowed from you."
Yeah.
That didn't go away. What happened after that? There's a great article in the Wall Street Journal about this, where in the state of Florida, for example, there's such a thing called recourse, and it's in many states around the country. The majority of states have the ability for lenders to have recourse should you default. And what the state of Florida did is the banks went to the courts and had deficiency judgments issued against all of these folks who turned in their keys, maybe even left the state, started their lives over, where at that point, a year, 2, 3 years later, a sheriff showed up, knocked on the door, served them with this deficiency judgment that said, "You still owe the bank on the home from 3 years ago, and there's compounding interest, late payments accrued." So this is devastating for many people, but it's the long arm of the lending game. And so Islamically, we have no recourse in all 34 states that we operate in. We would if we went to 50, because the contract inherently doesn't have a lending borrowing relationship built into it. And if something that happens, we would walk away with a loss as well. So
Do you mind if I
Yeah,
follow
go
up?
for it.
The whole time you were speaking, I was thinking about, okay, let's say for example, one of the big, I guess, deterrents for people is that, now that you said, okay, so this is a pro of guidance, or not just guidance, but maybe like Islamic finance, and then this is the con of conventional finance, correct? But one of the things is that I feel like to a certain degree, maybe this is a myth, and if it is, please dispel that. There's a lot more options for people in different credit brackets when they go through conventional, for example, FHA and so on and so forth. So how does Islamic financing, or even specifically guidance, how does that accommodate people that might have the capital but not necessarily the credit?
It's a great question. So people ask us, do you check my credit rating? Do you check my obligations, my debts, and so on and so forth? And we say yes. What is credit, for example? It's basically a number right now. We know it as a number, right? But even during the time of the Rasul sallallahu alaihi wasallam, people, before they did business with anybody, they would ask the community about that person and whether or not they met their obligations. So it's credibility. So are you credible in meeting your obligations? So today we have a number on it, but back in those days, they would ask the community, and you'd have essentially a reputation. And so for us, we do look at credit. We do have to understand we take on more risk than conventional banks and even we take on more risk than other Islamic banks because they are subsidiaries of banks, and so they are resolved to that essentially. For us, we do have sort of options based on your credit rating. We try to work with you. So if your credit is so far below it doesn't even meet the minimum requirement, we have essentially an educational process where you will receive from us month in and month out education around how to improve your credit without taking on debt, without going and actually paying a riba. So there's all kinds of things you can do to improve, but we would need you at a certain minimum threshold
Which is?
which is, it varies depending on, also, it's not just your credit score, but it varies on how much debt you also have, your debt to income ratio.
Yeah.
I think
that matters.
what I was going to say was that one of the cons, like the catch-22s for most Muslims that are very strict on riba, is that sometimes they don't even have credit, right? Because they don't have credit cards, they don't have any mortgages, and so on and so forth. So I guess I ask you,
It's like a cycle.
Yeah,
You're trying to avoid the
you're trying
interest.
to avoid the interest, and
Yeah.
then therefore you don't have credit, but you need credit to be able to get a.
But
So
it's
for
a
you guys, how
misconception.
does?
It is a big misconception that you can't build your credit because you don't want to participate in riba.
Explain that.
Yeah. So, so I would urge folks to understand, getting a credit card and actually swiping it for your groceries that you would normally pay cash for, swiping it for gas that you would normally pay cash or through a debit card, using it for your daily expenses, and then before the month is over, paying it all off, builds your credit.
Yeah.
I will say that some people will even say the fact that, because I've had these conversations with people, and there'll be like, even the mere fact of having a credit card, because you're signing a contract saying, if I don't pay within, the 28-day cycle, I will pay the interest. Just that fact, kind of discourages them from getting a credit card, period.
Well, I think it's
which is
discipline.
kind of, yeah.
I think it's a discipline issue. So as long as you're disciplined with your expenses, you can even set it on a timer. Like you can make sure that you avoid the interest by making sure you have payments going from your checking to that credit card automatically for the exact amount.
Yeah.
Because look, you're essentially borrowing the money at zero interest if it's within 30 days.
Yeah.
So keeping that in mind, we also take into consideration, of course, leases. So if you're leasing a vehicle, that helps build your credit because you're meeting an obligation, and leasing is halal. There's nothing wrong with leasing a vehicle.
So I think I want to, we're kind of running kind of low on time as well, but I want to transition into, earlier we talked about, credit rates and stuff like that for the Muslim customer, and also the down payment, which is a lot of feedback that I've gotten is that it's a lot higher than conventional banks, which might require like 5% versus 20% that the Islamic financing requires. Why is that? And the other thing is the overall loan or amount that the customer pays back to these Muslim companies are a lot higher than a conventional bank. Is that true, or is that a myth?
Yeah.
Okay.
Sorry,
it's a lot. Where we've heard, Islamic financing is a lot more expensive, and why does it feel that way to certain people?
So number one, the minimum down payment requirement for guidance, I won't speak on behalf of anyone else here because for us is 3%.
Okay.
So it's not 20% that some people think, or 15 or anything like that. So it's 3%. And we work with down payment assistance programs throughout the country.
Okay.
We work with many here in Minneapolis. In fact, we just launched new relationships with new down payment assistance program providers that we're unveiling today as we speak. So I would encourage engagement to learn more and understand. And I have to say, we are, again, not a bank, not a subsidiary of a bank. The reason I make that point is we're always going to be limited to certain things by design and by choice. So we're not apologetic for it, because if we were to affiliate or tether ourselves to a bank just to open up the options, the dilemma with that is once I do that, I'm engaging in some sort of riba or another. There's no way around it. When you are a subsidiary of one of those banks, you actually are governed by banking laws, number one. And that means banks are prohibited from owning real estate. And so you become prohibited from actual ownership.
I didn't know that.
They are prohibited from owning real estate in the United States with the exception of two scenarios. For their branches, they can own their branches. And when they foreclose on your home, they can own it for a short period of time. And that's all. So co-owning with you in the onset of an agreement is prohibited. And if you are a subsidiary of one of these banks, you essentially have given up the one of the two major cornerstones of Islamic finance, which is ownership. And I will say to a lot of Muslims out there, Muslim Americans who want to make a conscious effort to learn more and understand, be vigilant, because if you ask the question, are you owned by a bank, to many of our competitors out there, the answer will likely be yes. And that puts into question whether or not they meet that criteria of ownership first. And then comes the criteria of risk sharing. And in many cases, we've looked at those contracts with lawyers because you have to go into the minutia. And unfortunately, the loss sharing isn't quite there as well. So by design, we have chosen not to affiliate or tether ourselves to banks because it would result in the removal of what we're trying to actually remove.
Yeah.
I have
Go ahead.
so many questions.
I know. We need like 2 hours.
2 hours for
oh
this.
my gosh.
So I guess, so we've been talking a lot about the new homeowner, right? Let's say, for example, now my question goes for the homeowner that kind of went with the conventional way or with another Islamic financing. I noticed on your website, on Guidance's website, that there's the refinance option. Can you tell us a little bit more how that works exactly in the Islamic financing context?
Absolutely. So if you're currently with a conventional mortgage, we can absolutely help you get out of that mortgage. We've done it for thousands and thousands of Muslims. It works this way. So you currently have a debt obligation to a bank, let's say, and let's say that debt is $90,000 on a $100,000 house, right? Just to keep it simple. So we would come in and we would actually pay that off with the funds that we're bringing, our funds. And with those funds, well, first we would actually appreciate the house. We need to get a proper appraisal of the house value at that time. So it could have appreciated. So maybe that 100 is now all of a sudden 200 or 110 or whatever. But that establishes now the baseline value of the home. And then if the debt is 90,000, that establishes the percentage of ownership now in the home. We would essentially pay that off. So that goes away, making us now owners in the house at that dollar amount, which may represent 90% or less if the house appreciated, right? So then that creates the contract with us, establishes our percentage of ownership at that time, the term you'd want to buy us out for, 30 years or 15 or 20, and your monthly payments based on the rate.
And I'm sorry to cut you off, but is the percentage of ownership, is that dependent on anything that's going on in the housing market? Like, you know how it says currently the interest rate is 6%, 7% or whatever. Is it dependent on that, or is it stagnant in a specific, like you guys make a decision every year to have this kind of percentage of ownership, therefore that's how you, or if let's say for example someone that has now it seems like 5% is a low interest rate. Like, let's say that someone that has a home mortgage with a 5% interest rate, when they want to refinance with you guys, how would that work? Like, I guess in a way, because
I think you're referring more to the cost.
Yeah.
The ownership is established with our cash coming in and establishing.
It's like a decreasing. So the more payments you make, their ownership goes down.
Yes.
Your ownership goes up. That's different than, I feel like, the profit rate. And that's the confusion a lot of people have, is that just because you call it a profit rate, what's the difference between an interest rate and that?
Yeah, that's a great question. We get that question all the time.
Yeah.
Well, so our profit is made from the customer actually having exclusive use and enjoyment of our portion, not the whole house, the portion of the house that we own.
Yes.
Which is declining each month. So actually you're paying each month less and less of a utilization fee. We call it profit rate, but it equates to a utilization fee for usage. Now, what's the difference between that and a conventional loan? So just because the numbers might equal the same amount doesn't mean they represent the same thing.
Okay.
Meaning, if our rate today for utilization is 6%, and the banks are charging 6% on money that they actually loan out, doesn't make our contract all of a sudden a riba contract? This is an important aspect to, I think,
It's a
education.
different paradigm.
It's a
the
completely
number come
different paradigm.
from?
So it's a great question.
Yeah.
So when we were developing the program during the R&D phase, when we finished structuring the musharak mutanaqisa and ownership declining and their ownership increasing, we asked the Sharia board, what should we charge for usage, for them using our portion of the property? And the response was, this is not a Sharia question. You can charge whatever you want to charge. If you charge too much, you go out of business. If you charge too low, you go out of business.
Yeah.
So you need to be competitive. So they mentioned something called benchmarking. It's traditionally approved in Islamic financial transaction laws from the Sharia perspective. And all it says is you can look at who is facilitating homeownership in the marketplace. And these are the lenders. They're facilitating homeownership through a lending agreement and charging a cost to loan money. But it's a cost. And you can benchmark your rental payment, right, or whatever you're going to charge for rent in this case, against that cost. So benchmarking is acceptable. A simple example to benchmarking is this. This was brilliant. I heard it, and I'm going to regurgitate it to you. If I was to go out to a grocery store and I see a bag of potato chips, and we can eat potatoes as Muslims. There's no problem with that. But if you read the ingredients and they're fried in lard, could we eat them?
No.
We can no longer eat them.
Yeah.
We have to put that bag down, no matter what the cost is.
Yeah.
It's 99 cents a bag, whatever. Tomorrow, somebody comes into the market and produces potato chips that are fried in vegetable oil. Now they have a predicament. What are they going to price at? They're going to look across the shelf and see that most potato chips fried in lard are selling for 99 cents a bag. So if they sell at 99 cents a bag, does that automatically make them haram?
No.
No.
It's not about the price. It's about the contract and what you're paying for, the process.
Yeah.
So
I feel like most of the reasons, to just go back to that simple potato chip comparison, is that sometimes for most people, and I don't know necessarily if it's true, but it feels like that potato chip, if it's 99 cents for the lard one, of course taking into account that's haram, right? The vegetable potato chips feels like it's a lot more expensive than it like compared to that.
Yeah.
I guess in a way is that, like, if the goal is to make it easier for the Islamic community to and I'm not saying you guys shouldn't make profit. I want to make, I'm a business major, so I makes sense. But if the goal at the end of it all is to make financing and home ownership easier for the Islamic community, how come it feels like that, there's a big discrepancy between the lard and the vegetable?
Yeah. In most cases, we find ourselves right there in line with what's out there from a pricing perspective. We literally have a department, a pricing department that monitors rates 3 times a day. And then adjusts our pricing against usage. So the usage fee gets adjusted and gets alerted to the account executives that work for us about 2 or 3 times a day. And from my vantage point, I know there's myths out there, but from my vantage point, the reality is we're very competitive. We're extremely competitive. Now, you may pay an extra with guidance fee, which is, you may or may not have heard of it. It's our LLC fee. So we created an LLC for every single property that we finance in the United States to establish true ownership in that property through that LLC. There's a cost to actually
run an LLC,
manage it, administer it once a year. The state of Delaware is probably wondering, who in the world is this Muslim-owned company buying tens of thousands of LLCs, right?
Yeah.
But the LLC is actually not just establishing our ownership, it actually establishes protections for our consumers. If you think about it, if I co-own with you and I co-own with you and I co-own with 40,000 Muslims and someone slips and falls in your home and sues you and recognizes that they have a partner, you have a co-owner, they can come after me and all of our co-owners around the country. So it's actually protections for all of our co-owners. And it's also protections for you, because if someone was to take on a frivolous lawsuit against guidance, they'll be able to maybe go further and go after the homes. So
to kind of pivot a little bit, so after you've been living in the home, you know, you're in a partnership with Guidance. Does Guidance ever sell that debt? Because I know that some of our friends have said, you know, like after they've gone through some of these Islamic banks, after a couple of years, they'll receive a letter saying, you know, this is a notice that your debt has been sold to Freddie Mae. Is that ever the case?
First of all, based on the contractual agreement between us and all of our consumers, this isn't a debt.
Okay.
Yeah. Or they're part of the ownership.
So it's financing that's in the property. Now, that agreement, our co-ownership commitment agreement, is a revenue producing agreement, right? There is actually a revenue being generated. So one of the things that I help clarify for folks is the secondary market and how it works.
Okay.
And this is a little bit deep, and I hope that I won't lose you.
My coffee.
Yeah. So it's an aspect of securitization. Securitization is a key aspect of home ownership. So you've heard of the name Freddie Mac and Fannie Mae.
Yep.
Freddie Mac and Fannie Mae are not banks, and they don't loan money.
Did I mix up the names?
That's okay.
Freddie Mae or whatever.
Yeah.
You know what I was talking about.
Yes, the Fannie and Freddie, the sisters.
Yeah.
They actually are not banks, and they actually do not loan money. They're prohibited from lending money.
Okay.
So what do? They were established by Congress to allow foreign investors to actually invest in housing in the United States, because there's not enough money sitting in depositories in the United States banks to support funding for housing in the United States. It's $1 trillion requirement for that every year. So they were actually created to be the middlemen to pool these mortgages into something called mortgage-backed securities. And they would offer these securities, 500 million security at a time or so, to foreign investors. And I'll give you an example. Pension funds. I don't know if you know much about pension funds, but teachers, for example, are part of pension funds. So let's say a pension fund for the teachers union in France. There's a fund manager so that those teachers have their pension when they actually retire. They have to manage those funds, and they have to invest them in something. One of the things they invest in is U.S. mortgage-backed securities, because Americans tend to pay their debts, right? They tend to pay, and so the actual return is a safe return, so to speak, for that pension fund manager. Freddie Mac and Fannie Mae make those possible, but when they actually engage with Guidance, what are they looking at? They're looking at co-ownership commitment agreements. So what they're doing is essentially seeing revenue, risk and revenue, and our revenue comes from what? Utilization fees. So what we do is we sell the revenue rights to Freddie Mac and Fannie Mae so that they can open it up and share it with pension fund managers and other international managers who want to invest in the U.S. housing market.
Okay.
Now, they don't know that they're getting halal returns.
Oh, okay.
But all they do is essentially pool these and create securities. Sukuk is actually permissible in Islam.
Does Guidance ever leave the contract between you and the consumer?
The answer is no. And so that's a simple no. And that's what people fear, I think, is that Guidance is going away.
Yeah.
What we do is we sell the revenue rights essentially to Freddie Mac and Fannie Mae, but we are the servicer. It's called, in the industry, it's called servicing rights.
Okay.
We maintain servicing of our contracts forever, for as long as the contract.
Until the term.
Until the term.
Okay.
So the customer will always, because the LLC is registered with who? It's registered with us.
Okay.
That claims this. That's take.
Okay. Because afterwards, like you don't see the bank, and I'm not saying I don't have any experience with Guidance, but with other funds that I do have experience with, you don't even, like, your payments don't even go to them.
Yeah, your payments will go to Guidance every month. You'll get a statement from Guidance.
Okay.
You'll get instructions to, cut a check, if you still use checks, to Guidance Residential. Now, we can hire administrators to send that on our behalf. And if we do, we have to alert you. That's part of the process. So it's called sub-servicing. So it's an administrative task. So we do hire a company that literally just takes our mailers, our envelopes, prints out our statements, sends it on our behalf, and then collects the payments on our behalf. Because if you did it in-house, it costs more, and that cost ends up going where?
To
back to the consumer.
consumers.
So we outsource it just at least so that we can keep our costs down. But you'll always be dealing with guidance residential.
So we're running out of time. So I wanted to kind of just give you an opportunity, like an elevator pitch to why guidance and not the others.
Well, so I think we make a conscious decision to avoid riba, and it is a decision that's rooted in our faith.
So are you saying the other Islamic companies may not?
Well, here's what I would say. If you're going to go and make this conscious decision to please Allah subhanahu wa ta'ala, to rid the biggest purchase you'll ever make in your life, the roof over your family's head, if you're going to remove riba out of it, you should take the time to do some research.
Yeah.
I urge everybody to do so. And I mentioned at the top of the hour that there are certain requirements. We brought 7 of the world's leading scholars to ensure that this is done correctly. We did that over a course of 3 years. We took the time to actually engage to the point where it costs us more money, to the point where when we launched, we were essentially the only institution that is not tied to the riba-based banking marketplace in the United States. And that comes with a lot of pain and challenges.
Yeah, essentially you're an outlier.
We are an outlier.
Yeah.
Our costs are higher. Everything becomes a lot more challenging for you as an institution when you're not tethered like that. So the most important thing, I think, is to make sure that if you're going to make that decision, you made the right decision. You didn't make the decision based on just the cheapest in the marketplace. I think pricing matters. Yeah. But when you're looking at pricing, you want to make sure you're not also diluting the authenticity of the structure that is to be pleasing to Allah subhanahu wa ta'ala. A second thing I would say is when you do engage in home financing, and I hope it's with guidance, you'll recognize that we are a Muslim-owned institution through and through. Meaning, when you finance your home and we make a profit, that profit gets circulated within the Muslim American circular economy. It does not go in to line the pockets of bankers who will do what with it?
Loan it out.
Or probably open up another banking branch and another banking branch. And that's what's happening essentially with direct competitors.
So where can people find you if they have any questions or just, where can they find you?
And you guys have a Minnesota, I know you guys have a Minnesota base. Where would that be also?
We do. So online, they can find us at guidanceresidential.com. We also have a YouTube page that has a lot of videos that are short and can help crystallize the information. We are actually opening up an office. Today is our inauguration of our
awesome.
sort of first day, or October 1st it was, in the Zawadi Center in Bloomington, Minnesota. So our office is there now.
Oh, is that by the Dar Farouk Masjid?
It's in the south. It's Bloomington.
I think I remember hearing about that. Yeah.
Yeah.
It's a growing community.
Yeah.
It's really nice.
The Zawadi Community Center is really profound. It has a coffee shop, a restaurant, offices, a banquet hall. So we've essentially moved our office to that location, and it makes it, I think, very comfortable for people to come visit with us, talk about their options, go grab a cup of coffee, and even maybe have lunch or dinner in the center. But online, guidanceresidential.com. We have a number of different social media feeds: Facebook, Twitter. What else is out there? Instagram,
TikTok. Are you guys on
TikTok? Yes, we are. We're on all of those.
Are you guys? Last question, and I just want to, for people that are, maybe not English is not their first language, and how do you guys have employees that are either in the Somali community, in the Oromo, because Minnesota has a large Oromo Somali Ethiopian community that are interested, that are in Islamic financing, so
to help with the education part of it.
Absolutely. We have over 50 licensed account executives in our organization. I mean, our organization is 200 strong, but 50 are licensed to actually work with our consumers on this program, and they speak so many languages. I think the last time we counted, it was over 20 different languages
Wow.
amongst the 50 that are spoken.
Wow.
Of course, Somali here is spoken by at least 3 of our associates, and other languages as well. I know we have some really talented account executives who speak at least 3 or 4 languages.
That's amazing.
So we're always prepared to help, bridge the gap of communication in any way we can. And if someone's not here that speaks your language, they're likely to be in our corporate headquarters in Northern Virginia or somewhere else.
Awesome. Thank you so much. Yeah.
All right. Thank you. This has been Difficult Conversations.
Y'all.
Join the conversation in the comments section or on our Instagram page to share with us what you think. We do not have all the answers, and our biggest goal is to kick off and get the conversation going. May Allah subhanahu wa ta'ala accept our efforts and use us as catalysts for change.